The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, it was a pretty narrow, tight trading range in the grains and oil seeds to start the week on Monday. Kind of that penny higher, penny lower type of action was seen. Meantime, a strong day to the upside in cattle futures led by that feeder complex, but live cattle weren't too far behind. Let's take a look at the markets and talk through things here on Market Talk, powered by John Deere Operations Center. Joining us now, John Heimberg with Total Farm Marketing. John, good to have you back with us. Hope you had a great weekend. Almost felt like the grain markets didn't wake up a whole lot from the weekend, John. There just wasn't much to write home about. Again, kind of choppy, two-sided action across the board on the day Monday.
Yeah, it was. I mean, the lack of information that's out there is, still a big piece of this right now. We just, we're not going to get crop harvest progress numbers today. We didn't get export sales last week. We're not having a report on Friday. The market's just kind of left to its own pace right now, and sometimes that just leads us nowhere because we don't have any news. Now, we did at least get export inspections today, so that was nice to see, at least give us a trend, and those continue to be good, and that's some of the reason I think we saw the strength come into the corn market again. At the end of the day here, it was just that strong demand tone that's still in the marketplace. So, yeah, very quiet day. Felt that way most of the day today until we kind of got a couple penny push in corn. Soybeans, just choppy two-sided trade. I think a lot of that market's waiting for what's going to be announced by the Trump administration tomorrow. Is it a MFP type payment? Is it going to be beans only tomorrow? Or is it going to be beans and a little bit of corn like we saw in the past? And I think that'll help some producers make some decisions here. If they wind up getting a nice push per bushel, again, one of those things that's whether you want it or not, it's coming, and the way the media has been buzzing about the soybean market, they're going to address the soybean market probably fairly aggressively. But again, does that make a lot of decisions for producers to say, hey, I'm just going to sell the cash. I got my payment from the government coming, add it right to the top of my bushels, and there's my price. And, I've heard chatter up to as much as a couple bucks a bushel, could be coming tomorrow. So in terms of the plan, now we probably won't see the funds till next year, early in the year, but at least, it's something you can kind of budget in.
I think about this, the term certain uncertainty comes to my mind here. Everything with the payment from the administration, what's that going to look like? The government shutdown's going on. Of course, we don't have many of our normal reports like you mentioned. And so certain uncertainty there. We got to wait for some answers. But in terms of trying to manage our risk in the grains and oil seeds and watching these market movements, I know that at times like these, we have to maybe fall back on the spreads, the intermarket spreads, things of that nature. We don't get commitment of traders report either. We didn't get that on Friday. So, we kind of have to fall back on some of the fundamentals of what the market is telling us with a lack and a void of information. Right, John?
Yeah, very much so. And, and that was probably a couple things that came across my desk today that were pretty interesting. And, and maybe that's helped out the corn market a little bit too, because of that good demand. There's, some push to get, bushels down to the Gulf in that regard. Mississippi barge freight rates are dropping here. A lot of that's just a heavy supply. They can get things loaded up, get things moving pretty quickly down the river, but that helps out basis in some areas. And maybe that's some of the reason we see a little bit in the market is just the fact that, I talked to an elevator I work with closely today, and he's just kind of like, yeah, we're dropping our basis because we got to kind of keep up with the demand at the barge, at the riverfront. And so, those things kind of come into play here. Now, there's obviously things we got to watch when it comes to river traffic, Memphis levels in terms of water depth and things of that nature. We're still okay now, but getting pretty tight if we don't get some rains. through that region. So, but that just is reflective of the demand side of the equation. You're looking at export inspections again, 63 million bushels today for corn. That's a little better than last week. And right now, total inspections about 260 million bushels so far to start the marketing year. That's up 56, 57, or 52%, I believe it is, over last year. So we got a big number there, and that's something that's going to keep this market motivated. The one thing that's a little bit concerning to me right now is the amount of old crop bushels that are still moving with the new crop bushels coming in, as guys were making decisions, held corn longer, just hope for a rally. Got a little bit of a rally here. Let's get the old bins cleaned up a little bit so we can put the new in. The other side too is just what's happening with the bean market. A lot of producers are going to play the carry game a little bit here and maybe not move those beans, especially if they know they got a government payment coming. So, those are things that are out there that kind of the market makes you watch and wonder how we're going to play this thing out over the next handful of months. The biggest thing is beans need the Chinese demand to really get a good rally in my mind. Corn, we're just going to have a lot of supply to work through, even with the good demand tone as we get into the end of the year here. And I just think that combination of the 200 million bushels from the grain stocks report, as well as a record harvest, even with the yields coming down, it's still going to be a record harvest because of the acres. Just is going to make things kind of difficult for any real sustained rally in the short order here.
How much is South American weather going to start playing a role in U.S. markets as they're getting planting going? I know weather right now looks relatively favorable down there in Brazil and Argentina. So how much of a factor is that going to start to play in some of the U.S. market tone here as we get into the fourth quarter of this year?
I think that will be a piece of the puzzle that comes into play. What's happening with that weather is, we're watching planting last year. Remember, it was a late start, and then things turned pretty friendly, and they had a pretty good crop. Getting it going this year, it seems like they're right on pace, or maybe a touch ahead of pace. That means those bushels could be available to the market earlier. Last year maybe we were delayed a little bit, and that helped us out in January and February. So that's going to be a big piece of this too, especially when it comes to hoping for some Chinese demand here for United States beans. If that Brazil weather looks good and they get this crop in and they know they're going to be hitting some of those late January, 1st of February harvest targets, again, that just takes that window that we have for U.S. beans to get to China and shrinks it even tighter. So those are pieces of the puzzle right now too. If things start turning aggressively against that crop, you're going to see some weather premium come into this market quickly. And then also watch the longer term deferred futures too. If we know we got another big crop coming, what's going to be the impact on 26 prices as we start thinking about the future going forward here?
Let's talk livestock, John. Cattle again had a really strong day in futures on Monday. Feeders led the way. Anything stand out to you, or is it just some more of that volatility and what the chart's telling you? What are you seeing in this cattle trade right now?
Volatility is still high. I mean, you go look at the charts. We're in a consolidation pattern on that December contract. Now that's the key month. Now we hit first notice day for October today. We had options expiration on Friday for October, and then now first notice day. So those are some things that bring some volatility into markets. Anybody long October cattle, has to risk delivery here. They need to be out of those long positions. So some of that's why the reason you saw the December-October spread now explode out to nearly $5 today. I'm curious how far they're going to take December over October. We're going to, given where the cash market is, we're going to start running a pretty good premium in the futures market to the cash. Or is this market really anticipating cash to kick back in again? The tight supplies probably say the latter. But we'll have to really kind of watch this as we get to the end of the October contract here over the next handful of weeks. So today, again, some technical buying, but realistically, we're still within our consolidation pattern. Maybe that December contract gets back up 239 window. There's a pretty good barrier of lower highs up there. We'll see if it gets through there. If it gets through there, the energy's up back into the market. If it doesn't get through there, we'll probably spin back down. Got 233 as the floor, kind of consolidation point, and just keep ping-ponging back and forth until we see something out there fundamentally that may fire this market up. the biggest thing with the markets, with the government being shut down, we aren't getting a good look at commitment of traders here. And cattle, they've been getting out of that long position. They moved a lot of money to the sidelines over the last handful of weeks here in terms of that length. If this market all of a sudden gets interesting to them, they can quickly be buyers again and push these prices back higher, just regardless of fundamentals, if they just think this cattle market's ready to make another move. The problem is we won't see it.
Yeah, I was going to say, we won't see it. Is there a way to maybe give us an indication that's maybe happening without all these reports and more? Is it something we can watch, just the chart activity, the spreads, the cash market? Can that be an indicator, or box beef? Is there anything that can help us outside of not having that report, John?
I mean, first off, the fundamental trends, what's going on with cash, what's going on with box beef. Like I said, cash wasn't very good last week. Softer again. Box beef was quiet today, down to 362. Not a lot of movement, but the spreads will be the tell in terms of where we are. What does December do against February, do against April, the back months? If we got a tight cattle supply, you're going to see a buying strength and bull spreading in this market. That again can tip off to where we think the cash market's going to go to a little bit. But again, this is a market. If supplies are tight, we're going to see some buying come in. Now, today, the market actually put the premium back in the back end with April up over $3 today. So that to me reflects the tighter cattle numbers. The other thing, feeders, nice recovery. We actually filled the gap that came out from that one tweet I saw, or whisper of the border getting opened in November. And that put us down pretty hard with a gap on the chart. That filled today. And again, you go look at the cash index, still trading fairly aggressively above the board. So that just tells you, too, that feeders may have got themselves a little too cheap there. And that helped lead the futures higher in the live cattle market as well.
John Heinberg with Total Farm Marketing joining us here today on Market Talk for our analysis of Monday's trade, brought to you by John Deere Round Balers. John, how about that hog market? Let's a couple other things here, the proteins, before we wrap up today. Hogs, we found a little bit of green in deferreds late on Monday's trade. That's been an interesting market to watch, though, as of late. What stands out to you in the hogs as we get into the month of October?
Yeah, a couple different things. First off, where the fundamentals are. We saw the cash markets and the index has now started to kind of roll over here. It's actually down a couple bucks in the last 2 or 3 sessions, narrowing that gap up on the front end. We had a pretty elevated front end of this market. The last commitment traders had the funds record long hogs for a couple consecutive weeks. So we obviously not seeing the money leave. Now we've had a pretty good correction. We're seeing some bear spreading, seeing some money flow on the back end, which kind of tells me that the funds are probably walking away from this here at this time frame. Now again, cash trade, you'll have to keep a close eye on it. But again, this big break in the index, I think, has kind of got maybe the I don't want to call it the peak. The peak's been in for a while, but accelerated the downside a little bit in the cash market. So I think that can keep some pressure on the front end of this market here. As some of these spreads, like I said, we're getting kind of stretched out when October is poking over the $100 window. Now we're just taking some money off those October, December spreads versus the back end months.
What about on the dairy side? Curious what you are seeing there. I know we've seen plenty of volatility there in the last several weeks. What's going on with dairy this week?
No, we've had that volatility. We've had a nice price recovery off of those recent lows. You go look at that November contract, trying to hold the 17 area today. That is even despite a little bit softer cheese trade today. We've seen actually a nice little movement higher in that. But I'd like to see this market kind of dig its heels in here and around the 17 window, make a push up to the 18 area. And then I'm going to be a hedger. Got orders working for people up in that window just to get some coverage for the end of the year on the milk market. Reason why I'm looking at that too, you still got cow numbers at multi-year highs. You got production, 4% higher pretty much for the year in terms of milk production. So there's a lot of supply out there. But we're still in a window where supply starts to maybe slow down as we get a little bit colder, getting into the fall months. Obviously, cheese demand continues to be a good strength here. Would like to see a little bit more export demand kick in. So I still think this market can be pretty heavy if we get close to $18. I think that's a spot where producers want to make sure we're covering ourselves at least maybe into the first part of 26. Definitely cover into the end of the year.
Any other final thoughts for us, John, as we close things out today? Anything else you'd reiterate to folks?
I've talked about it in grains in the past. Just make sure you look at where your risks are. If you're moving bushels, now your risk is to the upside. Having some call strategies, let's keep them straightforward, keep them simple, keep them cost effective. We're not putting any extra risk out there other than owning a call. I think is a great way to go. Now, if you're going to play this carry game and you're going to be storing bushels, especially in the corn market, as well as in the bean market, if things don't come together with China, this bean market's got some pretty good downside potential. In the corn market, obviously, you got a lot of bushels, a lot of supply. I'm a little fearful. We got one of those years where we bleed the carry out as we get the first notice days and expirations of contracts. So let's make sure you're keeping some type of floor underneath if you're going to try to capture that carry or capture some basis improvement as we get out into early 26.
John, if folks want to reach out to you and have a conversation there at Total Farm Marketing and take a look at their marketing plan, what's the best way to reach you?
Just give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
John Heimberg, always good to chat with you. Thanks for joining us here on Market Talk, brought to you by John Deere. We will talk to you again next week.
Sounds great. And got to throw it in here. Go Brewers.
Go Brewers, go Brewers, go Brewers. John Heimberg with Total Farm Marketing joining us from Wisconsin here on Market Talk.
20 minutes from Milwaukee. Have a great day.
John, appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.